Q3 was a quarter of major shifts in consumer and technology mixes. For us, we've seen a much stronger performance of our consumer businesses and also of our connected offers. So we're reporting an improvement on the operating margin of 50 basis points, despite the market headwinds. And as you've mentioned, the cash of 212 million is basically 12% plus of sales, which is also a strong performance. There are other reasons, to be also happy in Q3. We've been able to reduce our debt by 350 million, which is a commitment that we had taken before the crisis. The 3 acquisitions that we did in 2019 have very positively contributed to the performance in Q3. And last but not least, but you were with us when we did that, we announced the carbon neutrality of Signify in September. So an environment which is extremely volatile, complex, but we've shown a good level of resilience in Q3.
I understand that. And you know what? We've gone through your numbers many times and we've poured over various parts of it. If I was you, I'm not you, because I'm just a mere presenter, but I think the margin thing is very interesting and very important as well, because I've said for years, you can sell anything in this world, but can you sell it profitably? So I'm interested in your EBIT margin increase and your adjusted EBIT margin increase of the growing profits engine by 130 basis points as well. That is moving in the right direction. How far are you from where you need that to be, Eric?
Well, you need to understand that the context of the crisis, Stephen, is very particular. So very early in the year, we said a few things. First of all, we had to increase gross margin, and we put actions to do so at the very beginning of the year, reducing cost in order to be able to expand on the operating margin. When you're facing a crisis of that dimension, you absolutely need to act very quickly on these very simple dimensions. Another one was making sure that we were looking at receivables and that we were being paid, so being close to our customers so that they could pay us. And we've done that quite well, because we have an improvement of our receivables during the year. And last but not least, the human capital. It's fundamental in a crisis of that nature to make sure that you protect your human capital. So, but the increase that you see today and this year in terms of operating margin is something that we have done, over the years. We went from mid-single digit to double digit. I don't think that's the end of it, but we had to show resilience during the crisis, which is what we've done.